Hi traders, welcome to another episode on the trades we missed last week. Without much further ado, let's move on to our trade number one that happened to be on Monday by around 3 p.m. Nigerian time. So we have a fair value gap here. This is a fair value gap here. So you can see that price comes back to this fair value gap and pushes to the bullish side. Now we have to anticipate that price would give us a break of market structure and a newly formed fair value gap. Now we have our high that was created prior to price tapping into that fair value gap, and the next thing is a newly formed fair value gap here. So this newly formed fair value gap would be where we would enter our trade. So as price comes back to tap into that fair value gap, coupled with the order block you can see here, so we would use this as a reason for our entry into this bullish trade. So we have a long position like so here. So let's say price hasn't gotten to this spot yet, so we just put this for our anticipation. So we have our stop loss. Our stop loss goes to this previous low here, below this previous low that's created for us, that's fair value gap we are using for our entry here. And the next thing is our take profit. Our take profit would be at the previous high here that price wants to reach. You can see why I put this take profit is because of this high and also this fair value gap here. So this can be a big reason for market to push to the downside. So we have a trade that we have a 2.71 risk to reward ratio on this trade for our trade number one. Now moving on, let's go to our trade number two. Our trade number two happened to be on Tuesday, a bearish trade. We have a fair value gap at first here. You can see a bearish fair value gap. So this indicates a bearish trade possibility. So we have a tap into that fair value gap and a push to the downward side. You can see how price takes this previous low here. So you can see this as a previous low on our 3-minute time frame here. This is a previous low here. Price comes down, takes this previous low, and also you can see this also is a previous low here. So this is a big reason for market to push to the downward side when it taps this fair value gap. So you can see this fair value gap here is our reason for our entry. This fair value gap is our reason for our entry. So we would set our entry at this spot here, just like so. For our short position here, our stop loss would be at this previous high that gave us that fair value gap, and our take profits would be at a previous low here. You can see this previous low would have been our take profits, giving us a 3.48 risk to reward ratio, like so. So that was our trade number two, which happened to be a bearish trade on a Tuesday. So we have another bearish trade that same Tuesday, but before then we had a bullish trade. We had a bullish trade here. You can see how price taps into this fair value gap here. This is a fair value gap here, giving us a demand area. Price comes to tap this area, pushes to the upside. What you need to look for is a newly formed fair value gap after it takes and closes above that previous high here. So you can see it close above this previous high here, and also this. So this first has indicated that once price wants to tap into this fair value gap, it can give us that bullish move because it has already closed above this high here. So you can see this fair value gap here. This is a fair value gap around this side. Price would want to come back to fill it and push to the upward side. So we have our trade like this. Price taps this side multiple times, indicating that it wants to actually move bullish. So we'll put our entry here like so, long position at this spot here, and our stop loss right below that low that give us our fair value gap. So the next thing is to look for how we can close this trade after accumulating the given profit. So we have a previous high here. Can I use this high? This is our previous high. So we have to target that previous high. And you can see how price gives us a 3.26 ratio for this trade. And price hits our take profit like so. Boom. So we have our TP hit. The next trade was that bearish trade. So you can see price coming from this fair value gap on a higher time frame, like our 5-minute time frame, higher than this 3 minutes we are on right now. And you see how price had given us a fair value gap a couple times. We have a fair value gap here, and we do not have a break of market structure at this spot, so we can't take this fair value gap. But here we have a fair value gap and we have a break of market structure here. You can see this previous low here. Market uses this fair value gap to take out this previous low, giving us a reason for market to actually move bearish once it comes back to that fair value gap here. So at this spot, this is our fair value gap here, and we would anticipate that price would come back to tap into that fair value gap and rally to the downside. So we have our trade position like so here to be ready for market to tap into that fair value gap, and our stop loss would be above this previous high that gave us that fair value gap, and our take profit would be at any given or any reasonable low that was before that trade. So we can use this. This can also indicate a reason for market to go bullish after taking this low. This low can be your liquidity, so you can also use this one for your take profits. This is giving us a 1.43, not bad. You can also go to this previous low here, giving us a 4.65 risk to reward ratio for your maximum take profits. The next trade would be our trade number 5, and let's see, it happened to be a bullish trade here. So we have a tap into this fair value gap here, like so, tap into this demand area. And then the next thing is to look for a break of market structure. Do we have a break of a previous high? Yes, we have it here. So after price breaks this previous high, can we find a fair value gap before that break? Yes, we can find one. This is a fair value gap, and this is where you enter this trade at this fair value gap here. So we'll put our trade position like so, long position at this fair value gap here. Our stop loss would be below this low here for your stop loss, and your take profits can actually be at this extreme high here, like so, giving us a 2.94 risk to reward ratio for our trade number 5. Moving on, this is our trade number 6 here, and our trade number 6 happened to be a bullish trade. You see how price taps into this fair value gap, taps again, giving us a trade here already, like so. Let me put it. This is a fair value gap here, and this is another fair value gap here. You can see price already has done the work here, giving us a break of market structure here. So we can just as well enter at this spots here. So as price taps this area, you can just take your trade to the upside. So that is actually our trade number 6. This can be a continuation trade for our trade number 6. Let me show you like so. We have a trade like this, and for this trade we have a 3.06 risk to reward ratio as price taps into this area. So that was our trade number 6, and moving on, our trade number 7 happened to be a bullish trade also. So for this trade number 7, we have a fair value gap here. Price comes to tap into this fair value gap, pushes to the upside, and before price comes back to this fair value gap here, it has already broken this previous high. This is our break of structure here. So we are anticipating that price will come back to this fair value gap, and price did just that. For our long position here, our stop loss would be at this previous low here. And our take profit would be at the previous high, like so. This is giving us a 3.48 risk to reward ratio for this trade number 7. Moving on to our trade number 8. As usual, we have a fair value gap here and a break of market structure here, and a fair value gap here also. So we have a fair value gap here, a fair value gap here. The first fair value gap is your point of interest, where you'll be interested in. Then market comes down to take out this low, and before that we have a fair value gap, and this fair value gap would be used for our entry. So this is giving us a bearish trade, like so. We have our stop loss right above that high that give us the fair value gap. Our take profits would be at the previous low here. So you can see, boom, we have a TP, and this is giving us a 2.62 risk to reward ratio. The next one would be our trade number 9. You can see our trade number 9 is a bearish trade. So this is a fair value gap here. We have a fair value gap here. Price comes to this fair value gap, taps away from it, and after price moves away, bounces off from it, we have a break of market structure here, and we have a fair value gap here. So this fair value gap would be our entry for our bearish trade. So we have a short position like so here. Our stop loss would be above this previous high here. Our take profits at any given low, we can actually take profits here, giving us a 1.87 risk to reward ratio because of this fair value gap here. So we can as well use this previous high or this one because of this fair value gap. So we can use this one here also. If you know we should take your profits here, and you don't want to be extra careful, so you can just take your profit here, giving you a 3.57 risk to reward ratio for a bearish trade. And that was our trade number 9 for the week. Our trade number 10, also a bearish trade. See a fair value gap here, a push downward, breaking below this previous low, and a newly formed fair value gap here. So this is where we take our entry at this second fair value gap here. Our stop loss will be right above this previous high here, and our take profits would be at any given low. So we can as well take profits here before this fair value gap, giving us a 2.11 risk to reward ratio, like so. 2.11 risk to reward ratio. Or you can take your profits here, giving you a 3.72 risk to reward ratio for this trade. The next trade would be our trade number 11, which is the last but not the least. As you can see, we have a rally all the way to the downside, so it's definitely the last but not the least. So we have a fair value gap here. Price taps this fair value gap, bounces off from it, and we have a break of market structure here and a fair value gap here, a newly formed fair value gap at this spot here, which will be anticipating that price will come to tap into and give us our entry. So a short position here, we have a stop loss here, our stop loss here, and our take profit would be at this previous low here, giving us a 3.17 risk to reward ratio, as you can see. But price can still go all the way to break this previous low, giving us a 6.1 risk to reward ratio, and also all the way to break this previous low still here at this spot. So this is giving us a 10.69 risk to reward ratio for this wonderful trade. So that was the last trade for the week, and moving on, would need to go back to our charts and backtest, and also project what the coming week will meet on our next episode on the trades you missed last week. Stay blessed, stay safe, peace.